Hello guys. The comment that I got now was from I don't know if the Wi-Fi is the name or what, but yeah. So the last part, this part here is very interesting. The first part not so and so, but yeah, I'll just answer the whole thing. So if you're new here, just make sure that you do check out all the other videos that I made in the very same order that I'm uploading them. So the first part goes like this, and also don't forget to subscribe. The first part says, what do you recommend for beginners to trade with a small account? So I didn't really understand it. So I don't know if you're asking me for the stuff that you should trade in terms of currencies, stocks, or whatever, or strategy, or but I think you are referring to, I would say if your account is still small or if you are still new, just pick those the currencies that are, you know they are not very brutal in terms of their pip value. Things like Euro USD, USD CAD, those are the ones that you can start with. But remember, eventually you need to remember that you don't have to trade everything for you to be consistent. So but I would suggest that once you are comfortable with trading this way, you just need to pick what you are comfortable with, what you understand. If you feel like, you see myself, most of the videos that I make on this channel, you will find that they are on Nasdaq or VIX 75, because those are the ones that I understand. So what I understand might be different to what you understand. So eventually you'll be picking, when you are starting, you can try, all those currencies and stuff, but it will come to a point where you're like, nah, this one I don't understand it. It doesn't behave well, or this and that. I like these two. Then you just focus on those ones. But when you're starting the account small, make sure that whatever that you decide to trade, it mustn't be too brutal when you execute, and then it just blows the whole thing. You see, you can't start a small account and then let's say you have got 50, right? And then you say, I want to trade H4 and trade Nasdaq. You see, it doesn't make sense. So when your account is small, make sure that you drop the even the time frames. You can't trade daily. Make sure that you're trading smaller time frames, and also trade the stuff that you know that it doesn't have a strong pip value. So when the advantage, or what's going to help you with trading the smaller time frames, is that your stop loss is going to be small. So if you are going all the way up and saying I'm trading daily, it means you're going to risk all that amount with one trade, of which that's not trading, that's gambling. All right, so let's move to the second part, which says, can one re-enter a trade after being taken out and the price starts to move in the predicted direction? The answer is yes and no. So it all depends. So this one, it all depends on the situation. So let me give you an example. Let's say the price is going down, right, on daily, and then it hits monthly support. You're looking to buy, right? And then let's say you buy, and then it goes up, you exited the trend line, and then it goes up like this, but before going up, it stops here trying to react to the trend line, but it doesn't go back down. The next candlestick shoots straight up. It breaks the resistance, and it breaks the trend line. You agree, right? So it means this is the nearest area of support. The next one will be the one at the initial where the move started, which is support, right? So now in this case, if the price, after breaking that resistance, if it comes back, you are more than welcome to take it from that. Why? Because this level has got, remember, you need to have, it has got 2:1. It looks nice, and all the stuff. So when the price gets to that one, you're more than welcome to buy. So let's say you buy from there and then you take a loss, and the price moves down, it gives you a discount, moves to the next level. You can still look to buy again. You see? So that means even though the first one failed, but you're still looking to buy, then that's how you do it. But so that's why I'm saying it can be a yes, that even after being taken out, you can still look to buy. You see? So but now let's say when it was going up, it did this. So let me just remove the whole thing. let's say it's just going down, it doesn't hit any higher time frame area of support, but rather it goes up and breaks the trend line. And then maybe let's say in the resistance, and then you take your chances there and say, let me try and buy from this support. We are not analyzing, we're just giving scenarios. Let's say I'm trying to buy from this support. If you buy from there and then it fails that support, it means what? It will give you a new low. It will give you this, which means you have to move your trend line and put it there. It means this trend line must go there, must go up and be there, which means you can't be looking to buy anymore, because now you see whatever that gave you that hope that you wanted to buy. Remember, you wanted to buy because of this, because this gave you a bullish move, and then you wanted to buy from where it started. But now all of that has been defeated. Now the price went lower than it, so it means the thing of buying should be out of your mind now. So that's why I'm saying in this case you wouldn't be looking to buy after your first you took the first trade and it failed. But in the first scenario, because of what, everything was still pointing up and you were sitting nicely inside that higher time frame area of support, that's why even though the first one failed, you were like, okay, fine, this one failed, but I shouldn't lose the whole thing and say now I'm not gonna entertain it. No, everything is still pointing up, nothing much has changed. Look at this at it like it's a discount. So if the price does this and it goes up, I'm giving you the scenario that we had before, and then it pauses there and then it takes off, right? And then this is your first support, second support. And remember, we were saying, I'm trying to draw what we had before. We were saying this is a monthly support, right? And the price comes back, this one. I agree, we said we have got 2:1, right? So it means if it fails, it moves to the second one. It's sort of, if you're taking it from the second one, it's sort of now you've got even way bigger profit margin. So that's why I'm saying it is even giving you a discount, so that you still have you will still make more money should the second one work. In this case, you would buy again. Why? Because you're still inside the monthly and you haven't given it, you haven't given the power to the bears in terms of what, having the lower low. So that's why I'm saying the answer to your second part of the question is yes and no. Or if, let's say, I know that if you take a loss, to enter again, it's not an easy thing to do. Let's say same scenario, right? Goes up, comes back, you buy, it hits you, and then it gets to the second one, you say, I'm not gonna entertain it, and then now the price turns there and then it goes up. Then you're saying price starts moving in your predicted direction, and then it starts moving up. But remember, you were skeptical, you didn't take it. Why? Because you're still crying over the first entry that you lost. Now it's moving up. How do you then join that movement? You can't just go and enter. Remember, you can't just do that. So rather you need to be patient in trading. You really need to be patient. You can wait for it to sort of do something like this, or to sort of, if it doesn't do that, so that it gives you a trend line. If it doesn't give you a trend line, let's say as it is moving up like this, it pauses there and then moves up again, so you can buy from this, continue like that. And then after buying, if it moves up and then moves higher than that, it gave you 2:1, you can close your half or move to break even, or do whatever you want. And then now that it has a higher high, it means the new bullish trend line would be there. You continue buying like that. So that's how you do it. So the only time, you don't just say, because now it is reacted from that, now it's here, I'm buying, and then you see someone buying there and putting a stop loss there, and then you ask yourself, like, how? Why do you do that? Why would you put a stop loss here knowing very well that price can still come here? So the sensible area to put your stop loss has to be there, which means you can't enter here. You need to wait for a new area to enter. So in this case, remember, when you're buying, that's why after identifying that level, we are trying to catch the new wave. We don't want to buy here. Already the price has been moving for days and days, and then now I'm buying here. No, I would rather wait for it to the price already looks exhausted, so I would wait for it to pull back. Then where is it going to pull back to? I just need to identify an area that I can take trades from, so that I catch the new wave to the upside. So the answer there was yes and no, and I explained when you can have it as a yes and when you can have it as a no, and how to enter again when you start seeing that it's now moving in the direction that you predicted, but you just didn't enter. You took the first loss and then you didn't enter the second time. I also explained that. So I hope the whole thing now is covered. So I'm gonna end it there, and then I'll see you in the next video that I'm gonna make, answering another question. I think I saw another question, but I don't know if I'm gonna record it now or what. But yeah, I'll see you guys in the next one. Sharp sharp.